Hey, real estate partners, happy Mortgage Monday Fun Day. It's Robin, your favorite mortgage broker, and I hope you're enjoying your last day or have enjoyed your last day of July. And now we move on to August. So I'm going to start out with a mortgage market update, let you know where the rate's sitting at. So for a 30-year fixed rate, typical type of a loan scenario, we're looking at about a 7.27, and then your standard 15-year scenario is around about a 6.63%. Now the Feds did meet last week, which I'm sure you've heard, decided to go ahead and raise that rate as predicted. That was no surprise, and it's already baked into what we see in our rates. So we didn't see a ton of fluctuation. We did see a bit of a up, a bit of a down, but nothing that isn't like a standard week for us. Now, there are some reports on the jobless claims coming out that may have some effect to future rates, but really, all of the experts are saying we're still sitting at the top. We're still probably not going to see a ton of movement for the foreseeable next, 30 to 60 days. So it's definitely time to buckle down and get creative. If you need some help with some ideas for your buyers on how to make it affordable for them or see what's going to best fit them right now to hold them over until we get to that relief, please send them my way. I would love to take a look at it for you and for them to see what we can do. Next, I want to bring up to you an article that I recently read. It talked about how banks are expected to continue to furtherly tighten up their restrictions on how they underwrite deals. And this is mainly going to affect their jumbos, their non-QM, so like their non-traditional type loans, and their HELOCs, their home equity lines of credit, or their HE loans. Now, I bring that up because it's always best that you have a few lender options at hand to deal with and to offer as a referral to your borrower. I would love to partner with you to help them out, especially if you're getting buyers that have been turned away in the past, have been currently turned away, or told that they don't qualify. It could just be a matter of their particular maybe retail lender or bank doesn't offer it. It doesn't mean that it can't be done at all. Sometimes it does, but a lot of times it just takes a little bit of creative work and someone like myself, a mortgage broker, to go shop around. So that's the whole idea. We don't just shop the rate, we shop the product too, because there could be specific wholesale lenders that will allow for it. We'll take on that risk that the bank or the retail branch won't do. So like I said, get with me. Let me know if you've got someone you want me to take a look at. I'd be happy to do that for us both. And then lastly, the TBD pre-approvals. I think it's super important that you know what that pre-approval that your lender is giving you is, what it means, what they've done behind it. It's very important that you know what kind of work they put into it. So TBD approval, what that is. And what I do for my buyers is I'm looking at the whole application. We're going to be looking at income. We're not just going to take what they say on the page. We're going to get documents. We're going to get something to back it up. We're going to look at it. We're going to put it in the calculator and add it up, make sure that I'm seeing what they're seeing. We're going to confirm assets to make sure that we're putting them in a position that they can actually do. We're going to pull credit. We're going to see what that looks like. Even if it's a soft pull, we're going to know what we're up against. And we're going to, at the very least, run it through an automated underwriting system to see if there's any red flags. If not, get it in front of an actual underwriting team that looks at TBD scenarios if needed. So that means that when you have that pre-approval letter, you're not going to put in a contract and then come back and say, oh my gosh, maybe costs have gone up because the risks changed, or maybe, oops, we missed something. We've got to lower the purchase price, or we've got to do this or that. That shouldn't be happening. There's like some things that are variable, but as a mortgage lender, a loan officer, you need someone behind you in that scenario that's going to be using actual income, actual liabilities, and real numbers, real rates, real taxes, and homeowners insurance, which both have gone up, to make sure that we are looking at the right figures. So all in all, I just wanted to put that out there, because if you don't have someone like that yet, or you need an additional person that does that, come to me. Let me take a look at it for you. It's what I do. It's what I've been doing, and I'm happy to help you and our future buyers out. So with that, I will leave you until next week. Hope to hear from you soon. And like I said, see you next Mortgage Monday Fun Day.